Ladies and gentlemen, please welcome to the stage your moderator for the session, Lucy Quist.
Welcome back, and welcome to this session on sustainable finance and infrastructure. We want this to be an interactive session. So ladies and gentlemen, please use the Slido feature on the app to pose your questions. We know that Africa needs more private sector investment to deliver substantive impact in achieving the global goals. This session will consider the offer of the City of London, the expertise of UK resident investors, advising banks, the London Stock Exchange, legal advisors, and the wider professional services. We also want to challenge our governments, banks, and businesses to do more to innovate, to mobilize the investment needed to create inclusive growth. We will start with a business panel discussion in a moment, showcasing the City of London's offer. And then we will have a session with a fintech entrepreneur, again from the continent. We'll conclude with a leadership session showcasing the African investment opportunity. And so, ladies and gentlemen, join me in welcoming to the stage your moderator for the next panel, Mr. Graham Wrigley. Graham is the chairman of CDC, the UK's development finance institution. Over the last 6 years, Graham has been a passionate promoter of CDC's mission as the organisation, with the strong support of the UK government, has transformed and seen significant growth in its investments across Africa. Graham, your audience.
Thank you, Lucy. It's great to be here. And I'm delighted to welcome on stage experts on mobilising investment from sustainable investment from the City of London to Africa. So please welcome on the stage Shola David-Bora, CEO of African Regions at Standard Bank. David Schwimmer, CEO of the London Stock Exchange Group, Michelle Giddens, co-founder and co-CEO of Bridges Fund Management, and Claire Francis, CEO and Regional Head of Global Banking at Standard Chartered. Together, this panel will bring together perspectives from global capital markets, African banks, global banks, and the world of impact investing. But before I start, just 60 seconds on CDC. As Lucy said, CDC is the UK's development finance institution. Founded in 1948, we were the first of its kind in the world. Our second chairman, Lord Reith, said that CDC's mission is to do good without losing money. And that's what we've been doing over 7 decades. In Kenya in 1948, Ghana in the 50s, across the continent. Always striving to work in dignified partnership with Africa's private sector to create jobs and create economic development. In more recent decades, CDC has become the largest investor in African investment funds, helping mobilise a $20 billion pool of equity capital. Today, CDC's patient capital supports 700 businesses across the continent. These businesses in turn employ about 370,000 people, and the companies generate about $1.7 billion in annual taxes for African governments. With the support of the UK government, CDC intends to invest £2 billion, a further £2 billion by 2022. We believe Africa has fantastic opportunities, and now is the right time to get behind investing in Africa and the SDGs, and that is precisely the topic of this panel. So, Shola, you bring a voice from an African bank and a great experience of working in Africa. So from your perspective, the perspective of Standard Bank, what do you see the opportunities on a geographic and a sector basis in the continent?
Thank you, Graham. And I just want to start by saying how great it is to be part of this Africa Summit. For Standard Bank, Africa is our home, and our purpose is to drive Africa's growth. And we have been driving growth on the continent for the past 158 years, and we are present across sub-Saharan Africa, South, West, Eastern, and Central, and we see opportunities in every one of these markets. Last year, we were one of the founding signatories for the UN Principles for Responsible Banking, which commits us to align our business strategy to the sustainable development goals. And we think this is particularly important because it helps to focus the business on key areas such as infrastructure, trade and investment, climate change, sustainable energy, as well as financial inclusion. We believe that the UK is a very important financial market. Standard Bank in 2018 raised $18.8 billion for its clients, and 1/3 of those fundings came from the United Kingdom. And we continue to integrate deeper financial connections between African markets and international markets. We do this for African corporates. We were involved, for instance, in the listing of 2 African corporates on the stock exchange, London Stock Exchange last year. That was Helios Towers, as well as Airtel Africa. We've also supported sovereigns as they raise their Eurobonds. We did that with South Africa, where they raised 5 billion Eurobond last year, as well as Ghana. We helped Nigeria raise its diaspora bond a few years ago. In addition to that, we make sure that multinationals who expand and invest in Africa have the required financing that they need. Graham, you know about the Globelec acquisition financing that we worked on last year, where we helped Globelec acquire 5 renewable power assets in South Africa. So we believe that the London financial market is one of the deepest international markets. We have an office here as well as in 4 other international financial centers across the globe. And we continue to connect our corporates, our sovereign corporates, corporate clients to pools of capital across the continent. We believe that the footprint that we have, and in collaboration with other stakeholders, because the financing gap for the SDGs is huge, and it involves collaboration between commercial banks, DFIs, export credit agencies, NGOs, and both debt and equity capital to be able to achieve those goals. And we are very keen to continue to work to channel capital into Africa.
Great, thank you. Globelec, by the way, is a CDC-backed power company, the biggest IPP in Africa. Globelec, by the way, is a CDC.
Continue to work to
the biggest IPP
into Africa.
Great, thank you. Globelec, by the way, is a CDC-backed power company, the biggest IPP in. Africa. Just one final point. What unique things do you think the City of London has in terms of providing capital for Africa compared to other global financial centres, would you say, Shola?
It has liquidity, which is very important for financial markets. Yeah. It also has credibility. It helps in terms of helping to craft innovative structures for financing. And we've had a few firsts in the City of London. I mean, the Nigerian diaspora bond is the first diaspora bond coming out of sub-Saharan Africa, and it was listed on the US SEC as well as in the UK as well, trading on the UK. So the London markets are flexible, they're deep, they are willing to try new things, they're innovative, and more importantly, they provide the expertise that is required to sculpt transactions to meet particular needs, even in terms of local financing bonds as well, which increasingly you will see coming up. The London market is ready and able to mobilize capital to drive growth in Africa.
Great, thank you. Now, and that's a great lead into you, David. I can't think of anybody better placed as CEO of the London Stock Exchange Group to comment on global capital flows. And it was interesting to read recently the Investment Association, whose UK members are responsible for £9 trillion of assets, have made climate change as its core priority for 2020. So what role do you think, David, the London Stock Exchange Group has in developing green and sustainable finance solutions for Africa? And why is that important for the continent?
Well, thank you, Graham, and it is great to be here. I'll start with the final part of your question. Why is it important for Africa? Young demographic, fast-growing economies, huge opportunities in Africa. But to realize these opportunities, Africa needs capital. And ideally, that capital is provided and utilized in sustainable ways. So let's shift to sustainable finance. Sustainable finance, green bonds, as a market, as asset classes, are still relatively new, relatively young asset classes. And Africa's experience with sustainable finance is relatively early in that context. So the real opportunity is that climate finance, sustainable finance, green bonds can be used to drive climate change mitigation, climate change adaptation in African countries, in African markets, by bringing in international capital. Now, there's a role to be played by governments, by African governments, by the UK government, by supranationals like the World Bank, in working with the ministries of finance and working with central banks to help set up the regulatory frameworks and to allow countries and companies to raise capital on international markets through local currency bonds and through green bonds, as well as through credit enhancement of innovative issuances. In terms of the London Stock Exchange itself, we have 215 bonds admitted on our sustainable bond market. That represents about 38 billion pounds of capital raised from 56 issuers in 15 different currencies. And just this morning, we had the pleasure of welcoming Acorn Holdings. Backed by Garantica, they have raised $40 million equivalent in Kenyan shillings to finance affordable student housing in Kenya. And that is the first African bond to join our sustainable bond market, and we look forward to welcoming many, many more. The exchange is also engaging with issuers, investors, policymakers in terms of potentially expanding our work in this area and setting up a transition bond segment. So lots of different areas of opportunity.
Fantastic. A few words, if you can, David, on how how the London Stock Exchange can help institutional capital, big institutional capital, understand Africa. How are you thinking about that?
Well, first of all, at our most fundamental level, we raise capital. And we have, I believe, 112 African companies listed on the stock exchange in terms of equity trading. They represent a market capitalization of about $166 billion. They have
London, United Kingdom, 22nd January 2020. Don Robert, Chairman of London Stock Exchange Group, welcomed the President of the African Development Bank to open markets for trading at London Stock Exchange on Wednesday, 22nd January. The reception in London followed the African Development Bank's Africa Investment Forum, the bank's innovative marketplace for accelerating investment into the continent, playing a valuable role in convening investors and corporates and removing the bottlenecks to investments and enabling free flow of long-term capital. The 2019 edition of the forum, held in Johannesburg, South Africa, saw investor interest secured in deals valued at 40.1 billion. Mozambique featured strongly in the 2019 edition, with state oil and fuel company Empresa Nacional de Hidrocarbonetos tabling the largest deal worth $24.6 billion. Wrapping up a 3-day visit to the UK, during which he attended the first UK-Africa Investment Summit, Bank President Dr. Atkin lauded the possibilities of continued collaboration with LSE Group. Don Robert, Chairman LSEG, said, "Deep and sustainable capital markets are key to supporting African companies and infrastructure. We look forward to continuing to play our part in the development of these markets, attracting investment to Africa. As such, we are delighted to continue our collaboration with the African Development Bank, which has now formally become a member of LSEG's Africa Advisory Group. My ringing of the bell here today marks the beginning of a new exciting, strategic and impactful engagement between the African Development Bank and London Stock Exchange to jointly expand wealth creation in Africa and the UK," Adesina said. Looking ahead, the bank chief said it will be worth working with LSEG's Africa Advisory Group to attract biggest share of the 5 trillion global exchange traded fund assets under management into African capital markets. The bank became formal member of LAAG, an advocacy group which serves as a platform to enhance the development of African capital markets, boost trade and investment flows between the UK and Africa on Tuesday. Adesina said the synthetic synchronization of £1 billion issued by the bank had attracted global institution investors to look at infrastructure in Africa. We are excited about the recent listing of Kenya at Acorn Holdings, the country's first green bond, in January 2020. He added, then also touched on the Africa Investment Forum. For Chinelo Anohu of the African Investment Forum, the visit to LSE formed part of bank's efforts to expand and deepen its relationships with foreign investors. With this unmatched growth, unparalleled investment opportunities, the next decade will with no doubt be Africa's trade. Today's ceremony signals the start of a new dawn for Africa, a continent that has embarked on an irreversible path to bring about lasting economic transformation, she concluded. The City of London is a financial centre of choice for Africa, said Matthew Rycroft, CBE, Permanent Secretary at the Department for International Development. On the recently concluding UK-Africa Investment Summit, Rycroft said, "We are delighted with our partnership with the bank, and at the summit, we made some extremely significant announcements. We announced commercial deals worth £6.5 billion, and there are many more in the pipeline. But it is not just about sums of money. It is also about ensuring that our investments are sustainable and that they enable real sustained growth in the economies of Africa." 112 African companies are listed on the LSE with market cap £125 billion. In 2019, 2 African telecommunications companies raised £800 million in capital through IPOs in London. Several distinguished guests were present at the ceremony, including Nikhil Rathee, CEO LSE, and Sunil Bakish. Yes.
Raised $22 billion over the last 10 years, so an enormous amount of capital coming in through our equity platform. On the fixed income side, we have dozens of corporate bonds and sovereign bonds also listed on the exchange. And I believe on the fixed income side, we have raised around $60 billion equivalent. So just in terms of our fundamental role as a capital issuing venue, there's a lot of opportunity there. We also partner with exchanges, market infrastructure across Africa. We work with 10 different exchanges across Africa in terms of providing our trading technology and other forms of technology for market infrastructure. We also work with governments and policymakers, regulators in the region to help them navigate the tiering of categories that the index providers, including our own FTSE Russell, have. So if a country can move up into frontier status and then move up into emerging market status, that allows that country and its markets and its issuers to attract additional capital from those investors that track the various index funds and the tiering. One last item I should mention that in February, so in a few weeks, we plan to launch a new index consisting of a little bit over 60 African companies listed on the London Stock Exchange. Many of them are dual listed on local markets. And by creating this index and working with asset managers who may set up funds. associated with this index, investors around the world, from pension funds to retail investors, will have the opportunity to invest capital directly in African companies.
That's great news. That's great news. Now, Michelle, you and Bridges are one of the pioneers of impact investing in the UK and are now working with others to establish the UK as a leader in the global impact investing movement. Can you explain to the audience briefly how impact investing sits in the wider investing world and what the trends are?
Yeah, brilliant. Thank you, and great to be here. Good morning, everybody. So I would argue that what David's beginning to talk about here in terms of sustainable investment, I'm going to venture to say that it's part of a quiet revolution in the finance sector. So we've seen in the last 10 to 15 years a real sea change from the idea that investment is simply about maximizing risk-adjusted returns to the idea that it has responsibilities to society, to people, and to planet. And I think that is going to be incredibly relevant for countries across Africa. So over time, in the last few years, investors have become they've come to believe that integrating ESG, environmental, social, and governance factors into investment will protect long-term value. And this is becoming a norm. So there is 70 trillion of assets under management that have signed the PRI. And according to Morgan Stanley, 70% of asset owners globally have got ESG policies. Impact investing goes a step further. So an impact investor says, I'm going to use my capital to try to achieve positive impact, positive outcomes for people and planet. So an impact investor is interested in investing in areas like health, like financial inclusion, like affordable housing, and crucially, an impact investor measures impact outcomes and reports on them. You asked about some trends. I'm going to pick just 3 that seem relevant for today. The first is that the impact investing sector, although not as big as the ESG sector, at about $500 billion, is one of the fastest growth areas in the financial sector, growing at 20% per year in recent years. And whereas the impact investing sector globally used to be represented by specialist firms like my own, Bridges Fund Management, now we're seeing the mainstream entering. Just in the last 3 to 5 years, in a big way. Goldman Sachs, BlackRock, Credit Suisse, Bain Capital, to name but a few. So scale and fast growth. Secondly, the global goals. Now, the global goals are absolutely galvanizing investor interest in a way that I never saw with the millennial goals. They are a map for impact-seeking investors on a roadmap for what marks a good outcome. And given that Africa has a gap of 1.2 trillion, I think it is, per year in terms of achieving the global goals, the fact that we're seeing much more capital directly invested to try to solve the global goals must be good news for Africa. Thirdly, increased interest from policymakers around the world. So I'm part of the UK impact investing space in terms of my day job. It was catalysed by UK government policy. UK government has been committed to building this sector over 15 years. I think, speaking to those representatives of the African governments in this room, there's a huge opportunity to very consciously build up your own impact investing sectors. And I would just mention to close, the Global Steering Group, which is the successor to the G8 Impact Investing Task Force, and which has over 30 countries involved, is being supported by DFID to particularly focus on expansion in Africa, so that African countries can be part of this community of countries that are looking to build impactful investing in their own geographies.
So, Michelle, what does that mean for African allocation and products available for the continent?
Yeah, so in terms of allocation, I think the first thing to say is that typical allocation models just really look at risk, return, and liquidity. And so they're going to look at Africa in terms of return, and in terms of risk, and obviously liquidity. What having this additional lens of impact or a desire to solve the sustainable development goals does is provide another lens in impact allocation that brings Africa into focus, because a lot of the innovation in solving the sustainable development goals is coming out of Africa. So if we want to talk about leapfrogging old forms of energy and providing home-based solar, for example, Africa is right at the forefront of that. I know I'm on the board with Graham of the UK's Development Finance Institution, CDC, and we've invested in home solar systems alongside others that have provided power to 3 million people. If I think about another area that Bridges ourselves invest in, which is in the UK social impact bonds, which are performance-related partnerships with government, there's a huge opportunity in development impact bonds across Africa. It's nascent, but it's growing. growing. So my own organisation has recently invested in one with Village Enterprise, which is financing graduation programmes out of extreme poverty. So absolutely direct relationship between an investment and direct impact. Village Enterprise has graduated so far 1 million people out of poverty. And then impact funds are spreading across Africa as well. CDC, as you know, is one of the largest investors in specialised impact funds in Africa, having invested over 100 million into funds that are in turn investing in things like serving the base of the pyramid or conversion to environmental solar. So we're seeing a lot of innovation and growth across Africa in impactful investing.
Thank you, Michelle. So Claire, Standard Chartered is a UK bank. You're bringing a UK perspective to Africa. And how do you, as Standard Chartered, see the opportunities in your role in this discussion?
Well, firstly, 10% of our workforce is in Africa, and we also believe that the global economy is changing at a staggering pace. When you think that 9.8 billion people will be on the planet at 2050, it means we will need to become effectively much better educated, much wealthier, and also more urbanised. We believe at Standard Chartered, and we always have, the Africa potential is simply enormous. We do believe that Africa will leapfrog the more traditional industry bases that we have worldwide, and we also believe that Africa will have 12 megacities by 2025. Africa is effectively an adopter of technology rather than a follower. It has the fastest mobile growth rate in the world, and not everybody has the use of laptops or access to the internet. So what we've learned at Standard Chartered is we need to innovate on simple handheld devices. We also recognise the need, with Africa being the learning, vibrant economy that it is, to ensure that we are always at the pivotal of learning in order to support the Africa customer base. And I think really if we were to look at even East Africa, imagine today if your child actually needs medicine, imagine rather than a 2 to 3 day treacherous courier ride, you can actually go onto your solar-powered TV, pay for it on your mobile, and actually have a drone deliver it the next day. We do really believe that Africa will be at the forefront of technology. Now, this early success that we saw really through M-Pesa in Kenya, we recognise that there is huge demand for digital services. And at Standard Chartered, what we've also seen is the uptake of our digital platforms has been staggering. In the Côte d'Ivoire, we've had 18,000 new account openings. In Uganda, we've seen an 8-fold increase, whilst in Tanzania, the bank has actually signed up more new accounts in the last few months than we did through the whole of 2018. So the economy is moving at a substantial pace. We've talked about the financing, David's talked about that, and also sustainability. But I think as we look to sustainability, it will happen across all industries and all parts of the Africa supply chain. We're very, very excited about that. And in fact, last year, we were very, very proud that Standard Chartered was the sole placement agent for the world's first blue bond, working with the Republic of Seychelles. We looked to raise $15 million from institutional investors in order to help clean up plastic in oceans. So having supported the green agenda for the last 10, 12 years, we're looking and working very, very closely with all of our supply chains, as the financial industry should do, in terms of thinking through what's next on the sustainability agenda.
Great, thank you. And now we have a question from Slido, and it's a great question. Everywhere I go in Africa, I always ask people, what do you need? What do you as a business, what do you as a country need? And local currency is always one of the 3 things they ask for. So this question, what are your thoughts on the role of local currency financing in supporting investment into Africa? So maybe David and then Claire can give a quick answer to that, and we can then go to another question after that.
Thanks, Graham. So the debt capital markets play a critical role in bringing the capital that's necessary for the opportunities that these markets see and need. Now, debt issuance has either the fortunate or unfortunate characteristic, depending on your perspective, that it needs to be paid back, or should be paid back. And if that issuance takes place in an international currency, or in dollars, in euros, in sterling, other currencies, and yet the issuer, the borrower, is operating in a local currency, revenues are in a local currency, costs are in a local currency, then the issuer is taking on that currency risk with the issuance. The benefit of local currency financing, local currency bonds, is that risk of currency movement is shifted to the investor. And this has been very successful in a number of markets. As I mentioned earlier, we welcomed Acorn Holdings with its Kenyan-denominated issuance. This afternoon, we are welcoming a Rwandan franc issuance to the exchange. And it's our hope that on the exchange, we will see the same kind of development of local currency issuance on the stock exchange that we have seen in, for example, masala bonds from India, where London is the largest offshore source of financing in rupees, in the domestic currency for Indian companies, and that has gone a long way towards financing a lot of the infrastructure there. So we see this as a terrific opportunity, terrific solution for issuers in Africa to borrow and have the currency risk be managed by their investors.
Claire, do you have anything to add?
Yes, I mean, obviously local currency and supporting local currency is incredibly important for Africa. The investor community has a job to do in investing, educating itself in terms of the opportunities. And I think you've only got to look at countries like Kenya that have really started to think through how they can innovate local currency financing through their bond markets, etc. We've come a long way, but we've got a lot further to go if we're going to together reach the objectives of the SDG and actually provide that financing into Africa. So we're very proud to be part of that. And I would really reach out to the whole investor community, whether we're the asset management community, insurance community, the hedge fund community. We really do have a job to do in terms of bridging this gap.
Great. So here's another question. And this one, Shola, you should answer this as an African here. In a nutshell, how would you summarize the case for investing in Africa?
1.2 billion people, a combined GDP of $2.3 trillion. We have 8 of the fastest growing economies on the world. We've got Kenya, Ethiopia, Uganda, Ghana, Cote d'Ivoire, Senegal growing at 6% and above. In Mozambique, the gas find creates huge opportunities to actually more than double the size of the GDP of that country, with opportunities in agriculture and energy. The trade opportunities are huge. And, of course there are challenges, but we genuinely believe that the opportunities outweigh the challenges. And the important thing about the next 10 years is that we now have a strategic framework in Africa. With the AU Agenda 2063, the Africa Continental Free Trade Agreement, and the SDGs, that helps to frame the conversation and align interests, into particular sectors. And increasingly, we are seeing governments coming up with the right policies, business-friendly policies, more cost-reflective tariffs that make the investment case for investments much more viable. So we certainly believe that this is the time to invest in Africa. And Standard Bank obviously is here to support that drive.
Michelle, anything to add?
Yeah, I would just add, so if we're going to achieve the global goals and our climate goals, and if we're going to do it in a way that is fair, then we need to be investing in fast growth in Africa, which is sustainable and which is going to create the end of extreme poverty. Africa is at the heart of those goals, and the global goals and the climate agreement are at the heart of London and the rest of the financial sector, which puts Africa right in the heart of that type of investing, which is in massive growth.
Great. So we must bring this session to a close. We've got presidents coming up next. We can't keep them waiting. So just your bullet point takeaways from each of the panelists.
I think we would say at Standard Chartered, we're very, very excited about the opportunity that Africa gains. We have a long legacy, and we really don't think that in the time ahead you can afford not to be looking at Africa as a key part of your investment criteria.
I'm going to take away the fact that I think we are going to be seeing a lot of leapfrogging in Africa, a lot of finding innovative solutions to things, and I'd like to think that those ideas will start to come out of Africa and to be copied elsewhere in the world. So leapfrogging, and then the importance of Africa in terms of achieving the global goals.
I would say the focus on partnership, whether it's partnering with the local exchanges in Africa, whether it's partnering with governments, partnering with the supranationals, and the opportunity to work with local investors, issuers. We have some members of our African advisory group here today, which we formed in 2016 to help us get input and work with key investors, key issuers, key policymakers across Africa to make policy recommendations. And that kind of partnership across the different stakeholders and the different constituencies has been very beneficial, I think, both for the London Stock Exchange, the City of London, but also for the investors and the issuers that we work with. So real emphasis on partnership.
And the next decade is a decade of growth for Africa, and I believe our role collectively is to mobilize resources, capital, technology to empower the people of Africa so that they can realize their potential. Because when we provide the financing and support for small businesses, for African corporates, for multinationals investing in Africa, ultimately it's the people of Africa who are impacted. They're empowered to go and realize their potential.
So I'm glad to hear we've got a bit more time, actually. So we've got another time for another question from Slido. And this one is, how important do you view the role of partnerships in helping to mobilise greater investment from the City of London into Africa? And, I think that's a great question. SDG 17 is all about partnerships. It's not talked about a lot, that goal. Why don't we start with Claire? What views have you got on this?
So we would say that Africa is really all about partnerships. I mean, if I look at the panel here today, very proud that we have deep partnerships with every member represented, just like we do with many people in the room. It is the culture, it's the opportunity, and quite frankly, I hope that through the course of today, you also have that opportunity to really galvanise the partnership that this conference actually gives us all the opportunity to do.
Michelle?
We were talking just before we came in about one of those partnerships, which was between CDC and Standard Chartered, which was directly after the Ebola crisis to provide loans to help small businesses that were struggling to kind of cope with the reaction to that crisis. So that's just one example of partnership on the ground. I think the other one that I would point to, I've just referenced, but I think is going to grow a lot globally in Africa, is the development impact bond model, where we work really hard to achieve very difficult impact change, like graduation out of poverty. There's a development impact bond to do with saving the rhino, and that's a complete partnership between the investor, social sector organisations that are doing the services, and then governments or outcomes paying funds or international development organisations. Those kinds of partnerships can make impact into a really attractive investment. And that kind of creativity, I think creativity and partnership is going to be the name of the game in Africa in the next 10 years.
David, I guess your job is all about bringing buyers and sellers, London, Africa, global capital markets together. So what do you think?
Well, a big part of the areas where we do partner in Africa is in capacity building with a number of the local exchanges. We have what we call the London Stock Exchange Group Academy, which runs capacity building programs and training programs. And in that context, we have worked very closely with markets and exchanges in South Africa, in Nigeria, in Egypt, in Kenya. In Kenya, we work with the Ministry of Petroleum on ESG standards as they are looking to further develop their governance framework. So the opportunities are really legion across the continent. I mentioned earlier in some of my remarks the important role that the supranationals can play as well. If you bring all these different stakeholders together, there's some really amazing achievements that we can accomplish.
Just the importance of public sector, private sector partnerships in achieving the SDGs. PPPs are critical. So the required legislation to enable PPPs is very important. There has to be mutual respect between the public sector and the private sector. And it's important that the policies that attract capital, that make it easier for the private sector to participate in financing projects, particularly the large infrastructure projects. It's important that Africa gets its PPP framework right.
Can you think of, what's the example, quickly, a great example of one you're most proud of in Standard Bank where this partnership have come together?
Well, there are various examples. I'll give, for instance, the Nakala Railway project, Mozambique through to Malawi. And that involved partnership of DFIs, export credit agencies, commercial banks, the local corporates, multinational, all coming together to make sure that we had the right financing structure in place to create a transport infrastructure that actually opened up that region, and drives growth.
Fantastic. So look, to conclude from CDC's perspective, we just talked about, Global Goal 17. What greater symbolism could there be today? UK, African heads of states and government, the African private sector, the UK private sector, the City of London, all talking about how we can get behind the global goals. So thank you very much for listening, and perhaps you can join me in giving a round of applause for a great panel. I think we're on time now to hand over to Lucy, so thanks very much.
Thank you very much, Graham. And to everyone on the panel, thank you. Now,